FANG stocks are no longer the #1 trade. If you want to see what is right now in 2019, check out this video. Where is all the money going? There is much contradictory information today. This is particularly evident since the last few trading days in 2018, with the Fed signaling that they will continue to pursue ultra-easy monetary policies. What does that mean for equities? Could they rise infinitely, or will a massive trigger event set off the markets on a downward trend? You came here for the truth, so let me unveil that for you. Today we are going to look at the smart money index. We're going to cover what the central banks have been up to. I want to talk about the most overcrowded trades right now. A lot to cover. Let's begin by taking a look at this. This chart is comparing the smart money index to the Dow Jones, and it goes back from 1990 up until present. Now, before I move on, for those who don't know what the smart index is, the index compares stock market flows in the first half hour of trade versus flows in the last half hour, on the notion that more experienced traders tend to wait until later in the session to make their moves. Essentially, what we have are individuals at the very end of the day buying in and making those moves, and you tend to see that particularly in the late afternoon. You watch the stock market rise, and generally all of those traders are moving in to the same exact trades all at the end of the day. Now, what happens after hours, what happens with futures, that's a whole different story, but you tend to see those late day movements, and it's always a trend that seems to occur. In fact, here in 2019, we've continuously seen this pattern. I'm going to show you more about that in a second. Let's go back to what we were talking about a moment ago. The Dow Jones and the smart money index have been tracking each other over the last few decades. And then we had a huge change. In 2018, the smart money was fleeing, absolutely fleeing the markets, and then it started to turn around. So I'm going to show you more about that in a second, but it's very evident that there was a huge disparity in between the Dow Jones and the smart index throughout this period of time. Here you can see what has happened since September of 2018 up until present. It looks like on the left hand side is showing that it's the log scale. So that's basically just comparing again the Dow to the smart money index, and we've seen a reversal in this trend right now that happens to be very clear, whereby everything seemed to have changed right after Christmas time, and this happens to be an issue not just for equities but for everything. While this is a few months outdated, it actually ends in June of 2018. I just want to show you how the Federal Reserve's balance sheet and the smart money index corresponds to each other, and you could see it right here. Obviously very well connected from this 2-year period, June 2016 to 2018. And that just tells us how important the central bank balance sheets are. The market is trading on that information. They're not going to let it go, and that's why we saw the market wetting itself at the very end of the year. The stocks were falling because the Federal Reserve increased interest rates, and they were worried, but now suddenly they're not worried anymore. I thought this was really interesting. The S&P 500 average hourly returns. This is from September to December, and it's very strange to see this type of behavior. So we can see that the markets had come down, obviously, when you look at it, by the way, based on the timing, whether that is at the very beginning of the day where the market rose slightly, and for the remainder of the day, the markets were dropping. Okay, that's percentage change. Fast forward from the 26th of December up until February 8th, something very different has happened. At the end of the day, you can see the market rising consistently, trading session after trading session, and it actually happens to be between 11 and 12 o'clock as well. Those are the two times when the market is doing all of their increases. And I tend to note the fact that at the very end of the day, we usually see a spike in the stocks stocks, and it happens time and time again. Now, you could attribute this to the plunge protection team who loves to come in the afternoon. They're the late shift. And then you also have this activity as well. So I just wanted to show you that I think it is incredibly important to track and trace all of these details that you would never ever see in the mainstream media. Now, some big changes have happened. Rotation into cash takes allocation to the highest since January 09. I mean, compare the two here. We're basically at the same level. Biggest overweight cash since January 09. These levels are getting very, very close together. Now, what happens throughout the rest of 2019, I don't know, but we definitely have something right here and right now. This really wouldn't happen if the market wasn't worried about the future. That's the question here. That's really what needs to be understood and answered, and we'll only know in time. Smallest overweight in fund manager survey global equity allocation since September 2016, and just comparing the two right now. This is very interesting because generally the markets had been so overweight in equities, and the last time we saw this was when the markets started to tumble from 2015 into 2016, when it was China, the US starting to encounter problems because of QE3 stopping. They were starting to increase interest rates at this time, and then the market started to become very fearful. And of course, you could see right here throughout the financial crisis what happened throughout that period. Obviously, they're going to go to cash. They're probably going to go to more fixed income during this time as well. If you're new to the channel, I cover the fund manager surveys from Bank of America Merrill Lynch every single month, just about, and this happens to be a reoccurring trend over and over and over again. But this time around, we actually have a change, and that is with the most crowded trade. It happens to be long emerging markets, if you can believe it or not. And if I scan through the list in here, we haven't seen long emerging markets going all the way back. I don't see it at all in here in a quick scan, and this is back to December of 2013. So there has not been this level of interest in emerging markets, and this could be because of the fact that all throughout 2018 they were getting beaten up heavily, so they're trying to push their money into something that has been subdued for a long period of time. All throughout 2018 as well, we had long FANG. That was the trade of the day. Then towards the end of the year, it became long US dollar for both December and January. And now the trade has changed. So they're trying to basically put risk back on the table. Let's invest in those emerging markets. That's where the growth is going to be. That could be risky. We'll see what happens. What do you think is currently the most crowded trade? You're comparing February and January, and essentially we have much less interest in the US dollar as well as the FANG stocks. That's not to say that there is, of course, no interest in it, but essentially we have a reallocation of many individuals' portfolios right here. The biggest tail risk month after month after month. In fact, it's basically for the last year, other than one instance, for the last year, the trade issues have been at the very top of the list. And that shows us that markets are very concerned. They already came out and said that we have an agreement in principle, but who knows what will come of that, of course. They're going to extend it. They're going to push it off further into the future at this point. They know that nothing's really going to come of this, at least in the near term. They want to calm the markets down. They want to make sure everything stays just fine, but somehow both sides need to come out and win. They need to show that they won. Even if they say both sides won, that's not good enough. One side has to be the victor. That's the way it has to appear. So I don't know how in the world they're going to project this to their respective media, but we'll see how it happens, and we'll all have a good laugh. What do you consider the biggest tail risk comparing January and February? And you can see that for yourself. I won't bore you. Just to finish off the video, Jeffrey Gundlach said this a few days ago, but I think it's very relevant today. Currently, $122 trillion US unfunded liabilities. That's 564% of 2018's GDP. To fund would require 10% of the GDP for 56 years. Nobody wants to talk about the unfunded liabilities. It's that elephant in the room. It's that clear and obvious thing. We're not supposed to talk about it. It's taboo. Don't go there. Don't go there. Well, of course, it's smacking you in the face, and it's really hard to not notice it. How can you not talk about the unfunded liabilities of Social Security, Medicare, Medicaid, and all of the other government promises that have been swept under the rug? You're telling me consistently that this is funded, don't worry about it, everything is just fine, and it couldn't be further from the truth. Look at all the pension funds in the United States that are underfunded. Is anybody going to talk about that? It seems like nobody wants to touch it, and you know that the politicians won't because, hey, let the next guy worry about it. I don't need to worry about it. But the funny thing is that you cannot hide it. You could not keep this swept under the rug. I assure you, eventually it peeks its ugly little head up from the ground and it will disrupt this system. Every single empire in history has tried what's happening today, and they will fail, just like every single other government has failed with a 100% accuracy for this indicator. I'm going to end the video there. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have everything that you need. You can actually flip through these books. All you got to do is go over to Amazon. There's a link in the description of the video. When you go there, you'll be able to flip through the pages of the books to see if you like them. And if you prefer the audiobook version, you can get that at themoneygps.com.